I'm Will Beecham, ICIS Chemical Business Deputy Editor, and I'm here with Paul Hodges, the Chairman of International eChem. Hello, Paul.
Hello, Will.
So, Paul, you've written us an Outlook piece for the first issue of 2018, which looks at some of the risks that chemical companies should be aware of for next year. I was reading the American Chemistry Council's report, an Outlook yesterday, which was pretty upbeat, talking about an upswing in all the major economies. Of course, the stock markets are euphoric. The ACC doesn't seem to flag up concerns about these new crackers coming on stream next year, 5 of them. But your article does allude to some of the risks, and I wondered if you could comment on increasing volatility in oil prices and interest rates and what impact that could have.
Yes, I mean, I think that 2017 has been quite a strange year in that what we've seen in the stock markets is a period of euphoria, as you said. I mean, Richard Thaler, who won the Nobel Prize for economics this year, a couple of months ago, said, we're living in the strangest of times. We have some of the most major risks that any of us have ever lived through, and yet the stock market seems to be thinking that everything is wonderful. And so I can understand, in a way, one focuses on good news. I like good news, certainly, and to be optimistic. But if you look at the oil markets at the moment, the oil markets are as complex as they've ever been. And I certainly at the moment see quite some potential for higher prices in the short term. We've been saying this now for 6 or 8 weeks, not particularly connected with the OPEC Russian deal, but just with the underlying state of the oil market. And what are the factors? I think this is the important thing that I'm trying to bring out in the article, is what are the factors we should be looking at apart from the day-to-day price? Now, one factor is major transformational change going on in Saudi Arabia. You've got a young crown prince, 32 years old or so, Mohammed bin Salman, who's fighting proxy wars with Iran in a number of countries there, Yemen, Iraq, and so on. Obviously, therefore, although it's not happening at the moment, obviously a potential for major disruption. You've also got a social transformation going on. All good things, we could say. Yes, women being allowed to drive, cinemas being opened, and the men and women being allowed to mix together in that way. These are all good things, but the risk of transformation, the risk of change is always much higher. And you've got, at the same time, they're trying to push oil prices higher. What is this doing in the States? Well, in the States, there's a record amount of money going into shale. So the numbers came out for the first 3 quarters of private equity investment, for example, and it's over $20 billion has gone into shale this year in the States. $20 billion, which is a third up on last year. And last year there was a lot going on. Take the Permian Basin, which is the largest, going to be the largest oil field in the world fairly soon, and the number of drilling rigs now operating in the Permian is above where it was 3 years ago, and those rigs are 3 times as productive. So you've got a disconnect here, that on the one hand you've got prices moving up, and you've got problems in the marketplace which are on supply side, which are helping to create that, and people building inventory because prices are going up. But on the other hand, you've got literally a sort of an explosion of activity in bringing on new production.
Do you think that the US production could compensate for disruptions in the Middle East?
Well, this is where you start to get into the question of political disorder and political uncertainty. Do we know, are we confident that the new Crown Prince will be able to carry out his agenda? He's locked up in, the Ritz-Carlton, which isn't exactly a difficult prison. I've stayed there myself, not being locked up, of course, luckily. So it's a luxurious prison, but he's locked up 200 of the wealthiest people in Saudi, and he's basically taking money off them. And Prince Al Walid, for example, is locked up there. Now, when these people get out and they've paid over whatever it is that he wants from them, are they going to settle back and say, oh well, yes, that was a good thing to have done? They may not. And if his program doesn't succeed, he's built up quite a cadre of people who aren't necessarily on his side. I don't know how that works out, but all I'm saying is that looks pretty risky to me.
Yeah. Okay. And apart from oil price volatility, how about interest rates? What's happening there?
Well, again, and I think that, if there's a theme about all this, it's dealing with uncertainty. Because if you've got a base case and you're pretty confident that it's all going to be around that, say oil, if you say it's going to be $50 plus or minus $5, it's not really a scenario, it's a sensitivity analysis. If it's 55 or if it's 45, it doesn't really change it. Now, interest rates, let's look at interest rates. We know, one, that interest rates are now starting to move up in the West, and the Fed is moving them in the States, and we expect that they will be moved in Europe and probably even in Japan at some point. We also know that interest rates in China have moved up by 40%, 40%. So there is a big move taking place in China at the moment, and a big move following on from China in some of the other emerging economies. India's rates have gone up significantly, and so on. Now, the question therefore on the exam paper for us is, did the people who borrowed at low interest rates, when there was quantitative easing going out and a lot of stimulus, are they able to afford the repayments and the interest payments at these higher rates? First question. Second question, and we saw this in 2008, so this is not something that is just dream world. We've seen this before, we've seen it lots of times, but most recently in 2008, do we potentially get to a state where investors say, oh my goodness, actually demand is lower than we expected, these guys have got a lot of debt, I don't think we want to lend to them anymore. At that point, what happens on the buy side or the supply side? And so this is what I'm trying to picture here is we are in a dynamic situation where we can't exactly know what is going to happen, but we have to look at scenarios where, base case, everything goes smoothly, the Fed manages to normalize monetary policy, no real upsets, stock market goes back to having the occasional downturn, but nothing too serious. And then we have to say, well, hang on a moment, what happens? I mean, the central bank governor in China, so the central bank governor in China said there was a risk in China of a Minsky moment, which is what happened in 2008, where investors said, we've made a terrible mistake, we're not lending anymore. Now, that could happen in China. That's not my base case. I'm not saying that, but if that is, say, a 10% chance, and if China was to go down that track, what would one do as a business in response to that?
I guess, go on.
Yeah.
I was going to say, it's going to remove a lot of capital.
There's all sorts of connections here which we don't really understand. That's all I'm saying. And so you can't expect that everything will be smooth. It might, but it might not be.
And in terms of indebtedness, it's not just China, is it? It's there's high levels everywhere.
I mean, central banks have done this insane, in my view, monetary experiment. $30 trillion of lending in an economy, a world economy of $70 trillion. In a low growth world, because you've got aging populations, our demographic story. Everybody now kind of accepts that that's happening. Oh, and by the way, in our industry, we also have major concerns now about plastics pollution. We have Blue Planet 2 and David Attenborough, and a real focus now on plastic in the ocean, and we must stop this. And we have supermarkets saying we must stop putting plastic in the ocean. The only way to do that is to remove plastic from the system. Now, I'm not saying that they will be successful. Maybe there are other things, but goodness me, we've got a large amount of new polyethylene capacity coming on stream in the States, for example, is the public prepared to accept that it's all going to end up in the ocean? Because that's where it ends up at the moment. If not, Houston, we have a problem.
Do you think there's a real risk then that the public disquiet about plastic pollution could have a real impact on demand for plastics?
Well, we've already seen it in some products. This isn't talking theoretically. If you look at PET worldwide, coming up to 40% of all PET is recycled. So we know that is already happening. It hasn't particularly hit polyethylene, but it has hit single-use bags. There is a growing movement now that we move on from single-use bags in plastic in supermarkets to all single-use plastics. So if you're a plastic bottle, a plastic chair, a plastic, whatever it is, if you're only using it once, the UK government has said it's looking at a ban on it. It's a G7 country. So this isn't an abstract theory of some long-haired non-governmental people. This is getting close to policy. Now again, I don't know whether it's going to happen, but you can't ignore it.
You also flag up protectionism and threats to free trade. How serious an impact do you think that's going to have next year?
Well, we already know that President Trump took the United States out of the Trans-Pacific Partnership straight away. So that would have been an enormously powerful trading bloc. Is now gone. He's looking very seriously at pulling out the states out of NAFTA, North American Free Trade Area, which will have major implications, not just for business, but for social order in North America, as indeed a number of the leading American business organizations have pointed out. This is not just about trade. This is about security risks as well. If you remove all this trade, we've got in Europe the UK pulling out of the European Union. Nobody knows on what terms that will happen. Nobody knows, and yet it's going to happen in just over a year. So it's getting pretty close now. So there's an awful lot of upset, and we also know that there are a lot of people in the Western world, particularly, who are very, very upset about the way things are going. And they don't feel that their children are going to have a better life than they did. Now that is a very unstable position. It's never happened before in the last 100 years. So it's unstable.
Do you think that kind of disquiet amongst the public could lead to increasing political disorder?
Well, it is already. It is already. Well, what is Brexit? Brexit is a vast howl of protest from the former industrial parts of the UK to say we've lost out. What is President Trump's vote? It is a long, hard howl of protest from people, mainly in the blue-collar industrial areas, who feel we've lost out. Say Germany, for goodness sake, Germany. The far-right parties are in the Bundestag for the first time for decades, since the Second World War. So there's really massive change taking place here. And the point is that nobody is actually doing anything about it. Nobody is saying, got to think about how we should do this differently. They say, no, it's just deplorables. We can ignore them, they're deplorable. You can't ignore a third of the population. You've got to change what you're doing. And that's my problem, that at a certain point, even though we in the industry believe very honestly and understandably that everything is going perfectly, if you look around, this go back to Richard Taylor's point, if you look outside of our industry, if you look outside our silo, this is the most uncertain time that any of us have lived in. At a certain moment, those uncertainties are either going to get resolved or they're going to start affecting us in quite a big way. And you can, as I say, you can see those uncertainties, and you have to, in my view, you have to plan for them, because you might dodge all those bullets, but you might not. And of course the other thing is there are lots of opportunities. If we're moving to a world where sustainability is becoming the key driver for the industry, we have a fantastic opportunity, and we should be focusing on it and really talking about it. And how do we move forward on sustainability? What is it we need to do? Because that's the opportunity.
So would you say sustainability should be moving up the agenda for chemical companies next year? How should companies be planning for all these scenarios that you've been mentioning?
Well, I think if you take a broad brush approach, I think you have to say, look, globalization was a fantastic trend. It certainly did me wonderfully in my career, but it's finished. I'm not saying that we're not going to trade with other countries and so on. We're going to get a lot more different. Why is that? One of the big reasons is you've got a much older population, 1 in 5 in some places of the population, some places 1 in 3 of the population are over the age of 55 and 60. They actually don't need any new stuff. They're moving into pensions. They haven't got any money to buy it. So the growth of the past is finished. What do you do if you haven't got a lot of money? You start to worry about making more use of what you've got. That is sustainability. Then, of course, you do get, and it's the World Economic Forum. It's not, it's not fly-by-night people are saying, you're going to have, if we carry on as we are, by 2050, we're going to have as much weight of plastic in the ocean as fish. It's just impossible. Nobody's going to allow that to happen. So we, in the industry, with all the skills we've got, and you can see certain companies are already focused on that. They've got chief sustainability officers. They're really starting to think. And it's not just about feedstocks. It's about how you actually run your business. You become more service-led and less product-focused. Because if people don't want so much product in the future, they certainly do want services. You can see this in the car industry, for example. You and I have talked about this. Do we need to have each own our car? No, but we do want to be mobile. Now, whether it's autonomous vehicles or whether it's Uber or whether it's car sharing or anything like that, we want to be mobile. Now, what can the industry do to help keep cars on the road longer, even if we're selling fewer cars? These are the challenges. That's where people are really going to make money in the next 10 and 20 years.
Paul, thanks very much. Good to talk to you.
Thank you very much, Will.